Hello, good morning, distinguished guests, ladies and gentlemen. Good morning. I didn't get a response. Good morning. Friends in the impact investing community, welcome to this very special program. We welcome all our listeners on 97.3 CDFM. We welcome also our online audience who are viewing us now on Impact Investing Ghana, and all our friends on Zoom as well. Welcome to the launch of I can call it the summary or the preliminary findings from a very important mapping that was done on the state of impact investing in Ghana, unlocking private sector capital for profit and impact. My name is Bernard Avle. Regularly, I'm a radio and TV journalist on CTFM. I also moderate conferences when the price is right. And so today, we're very grateful to Impact Investing Ghana for inviting me. So this program is streaming live. I need to make these announcements. If you are not supposed to be here, don't let the camera catch you because you are live all over the world. We're also live on radio as well. And we will be telling our viewers and listeners how they can get in touch. We do not intend for this to be a conversation among a few experts hidden in a nice hotel in Osu. This is a conversation about Ghana's economy. And a couple of quick points to say. It's very refreshing to know that this is the second straight day we are hearing good news from this sector. Yesterday, Njaro launched a very important fund, 150 million cedis, with money from some of the local pension funds. A lot of people in this room were there. And it tells you that despite all the economic challenges we're facing, people are not waiting. People are moving. And I think if the people who run the country know what's happening, the fact that we are moving, we are investing, we are talking, it should tell them that we know that at the end of the day, things will get better. And I think we should put our hands together for the impact investing community for that one. This program has three parts. We'll have a few nice speeches, some of which will be live, some of which are recorded, pre-recorded. Then we would get some details of the report to contextualize two main aspects, the demand and supply issues. Indeed, they identified 10 gaps within the impact investing or impact investment ecosystem. Some of those gaps have to do with demand-supply issues. Some of the gaps have to do with the formation of the ecosystem. So when the convener puts those reports together in the short presentation, we will then moderate two rapid-fire panel discussions to tease out some solutions on those issues. Then, of course, we would have the full report available for download. And then we'll also have a general discussion among all of us in this room. If by the time we are doing that discussion, the live streaming is still on, we're very happy to have you join us. So those are the rules for the day. Thank you. COVID protocol still on. I recommend keep your mask on unless you are speaking like I'm doing. President is going to announce some new COVID thing. Let's not give him a reason to change his mind. So just keep your mask on. Do everything that has to be done. I'm sure by the end of the week, there will be new announcements. Having said all of that, I want to quickly bring up to give us some quick thoughts, Mr. Alex Asiedu. And Alex is one of the key people within the sector, but for the purpose of today, is the board chair of Impact Investing Ghana. Ladies and gentlemen, please welcome Alex.
Good morning. It's just reading again, profit plus purpose equals social impact. That's a wonderful line, Emma. Well, it's great sharing impact investment. It's a super committed and capable team that has given us more traction than we could ever have imagined. So thank you, Abba and team, and all the partners for the wonderful work you're doing. And there's a lot of work to be done in the impact space in Ghana. We're full of so much negative news that sometimes we forget that there's light on the difficult terrain. And the launch of Njaro's fund yesterday suggests that there's quiet work being done behind the scenes. And the report that we're going to work on today, it highlights exactly where we are on our journey towards making impact investment a real and viable addition to the efforts that the government is making towards getting our country where it wants to get to. And we're grateful to all our partners who helped us put up this report. So hopefully today's discourse will help us to focus on what the gaps are and what we need to address those gaps, because we need to get there. We are in an almost desperate situation in our country, and we hope that we will be able, with what we've learned and what we're going to discuss today, get the country to the positive social outcomes that we need. Thank you very much and welcome.
Thank you. I'm used to much longer speeches from chairmen, so you caught me offside there. I was basically now putting my thoughts together for what to say, then you're already done. I don't know. These bankers don't have time. Anyway, it's good to... Thank you. Put your hands together one more time for him. Thank you very much, Alex. I'm going to introduce the... So, he's the board chair, and Amma is the CEO. A few things about Amma. So, she's done so much in this sector. She's very dynamic. I know she also either founded or pushed Social Enterprise Ghana. She has contributed to the growth of the impact investing community regionally over the past decade. She's been regional director of Reach for Change, launching accelerators and other programs across the continent. Yes, she founded Social Enterprise Ghana, and her contribution to the growth of impact investing has been remarkable. She's quite infectious with this impact investing bug, and she took over not too long ago. So she'll come twice. This one is just to give you some opening thoughts, welcome address to let you know in the right place. We'll bring her back to do a longer presentation. So, ladies and gentlemen, please help me welcome my friend Amma Latte to bring us greetings.
Alex and other board members, members of Impact Investing Ghana, our friends from the financial services sector, our funders, the RISA project of UK Aid. I can see Sean from AGI and the EU, Social Enterprise Ghana, the British Council. Ladies and gentlemen, it is such a great pleasure to welcome you to today's launch. It feels just like yesterday when we gathered in a similar fashion and launched Impact Investing Ghana. And Impact Investing Ghana was the product of months of hard work by a very dedicated team of volunteers, many of whom are in this room. People like Hamdia, Ismaila, Samyabua, Amajampo, Dele Sonikan, Enyunam Kakani, Gifty Volam, Lim Karime, and Anna Samake. We had a lot of hope. And our hope was that collaborating would lead to money moving to solve the many social and environmental problems that people face daily in Ghana and across Africa. And we were honored to have a committed and distinguished board of directors join us. And here in the room we have Alex. I see our board member, Constance Swanika, Yao, Obusu Brempong, Yofi Grant, Tralance Ade, Mirabel Moreau, who's also in the room from Injaro Investments, and Alex Bram from Haptel. And the consensus among all these people is that we needed a clear strategy and we needed to understand what was actually happening in Ghana in impact investing and take action based on what we learned. And this meant three things. One, mapping the ecosystem, understanding who's in it, what are they doing, what do they need, how could we get them to be more effective. Two, we wanted to understand the gaps and understand their root causes and what action could be taken to fill those gaps and lead to exponential growth. And three, we wanted to understand the size of the market, how much money is actually there. We didn't want to be a talk shop about how money should bring change. We wanted to commit to actual amounts of money being moved by different categories of asset owners and push them to actually make those investments. So this report enables us to make progress on a good number of those. We have a map that lists those in the ecosystem, and we've done a thorough analysis of the gaps. We were delighted to have Dr. Gordon Adumza and the team from Design Thinking Ghana and Dr. Charles Adongo from the University of Cape Coast lead in the research and the data analysis. And also to have leading organizations in the space collaborate, contributing data and sitting in our endless analysis and validation workshops. So big thank you to the Private Enterprise Foundation, Ghana Enterprises Agency, the Chamber of Corporate Trustees of Ghana, the Ghana Securities Industry Association, Venture Capital Trust Fund, National Entrepreneurship and Innovation Program, Social Enterprise Ghana, Design Thinking Ghana, the Ghana Hub Network, the Ghana Venture Capital and Private Equity Association, and Reach for Change. It's been an interesting year of workshops, surveys, interviews, and insights. And today, we are going to look at the recommendations. But we already began to take action because as we learned more about the ecosystem, we couldn't wait 12 months before taking action. And I'll highlight 3 of the early successes that we've seen in taking action to fill some of the gaps. So first, we saw an opportunity to unlock pension funding. And so in 2021, we formed the Pensions Industry Collaborative with the 7 largest pension trustees and fund managers. And they've worked together to create a plan of action to drive pension funding into alternative investments. A task force was formed to create an innovative fund of funds, also targeted at unlocking pension funding. And it was a great joy yesterday to witness the launch of the first Ghana-denominated venture fund that has all its limited partners being Ghanaian pensions. This shows that there's been a lot of traction since January 2021. The second action we saw was increasing the quality of enterprise support. And so we formed an enterprise support organization collaborative. It brings together the Ghana Enterprises Agency, National Innovation and Entrepreneurship and Innovation Program, the Ghana Hub Network, and leading enterprise support organizations in the space. And they've already created guidelines for enterprise support. They are creating a program sharing platform and are piloting a quality control program where enterprise support organizations will commit to executing programs that are in line with global best practice. And finally, together with the Venture Capital Trust Fund, we launched the Ghana Impact Investing Research Industry Collaborative. It's 50 researchers in the fields of social finance, entrepreneurship, and innovation, and they are working on a database. It now has 100 relevant, completed research in the field that can make data more accessible to people in the industry. And this is just a glimpse, it's a tiny glimpse of the change that is possible when we focus on clear actions, when we collaborate in ways that build on our strengths, and when we track our impact over time. So today we will focus on the gap analysis and recommended actions and some highlights from the map. And I trust that many of you in the room, watching online or listening on radio, will see opportunities for you to start or join some action to move money and ultimately transform lives and build our country. God bless our homeland Ghana and make our nation great and strong.
Thank you. I thought we'll continue. Bold to defend forever the cause of freedom and of right. Thank you so much. Amma, please put your hands together for Amma Latte. She leads a very incredible team of hardworking people. Mary's been sending me emails. I was almost tempted to block Mary. It's like, Mary, why? Like 12 a.m. email. I mean, anyway, but they work hard. They're very passionate about what they do, and it's great. So we've heard from Alex. We've heard from Amma. My next guest, you know, when you're an MC and you don't know who you are going to introduce, sometimes you go to Google. But it's not a very good idea because when I put his name in Google to give me something about him, the first Sean Dugan that came, or Dugan, is an actor of a movie called The Lobster. And I said, no, this guy doesn't look like the actor. Then I checked Sean Dugan, director, chief executive, mental health networks. Like, nah. I mean, mental health is important, but I'm not sure that's what we're talking about here. The most interesting one I saw was Sean Dugan, American football star. Born 1993. Yeah, so it, like, no, you can't. And then he's a linebacker. No, it's like, no, this guy. So let me just stick to what's on the script. On the script, he's the EU-funded investment promotion project guy. So his expertise is investment promotion, not football, not acting. He will bring us a quick word. Put your hands together for Sean.
Thank you. That's one of the more amusing introductions I've ever had. I would also add that you missed one.
Okay.
I am also a Benedictine monk who's a specialist in playing Bach. But there we go. I'm very pleased to be here. I'm actually astonished that there are so many people in the room. If you'd asked me if this event could happen a year ago, I would have said no. There didn't seem to be anything happening in the private equity impact investing space. Just by way of background, I was introduced as being part of the EU-funded investment promotion business linkages project. I'm responsible for investment promotion. And it was an interesting challenge, not least because I'm an economist. I only think about demand and supply. That's it. I can only cope with two things at once. But the first professor I ever had in economics said, the interesting bit is how demand and supply interact. It's about the market and whether there are failures in that market. And in Ghana, quite clearly, you've begun to articulate the nature and quantity of those gaps and failures. From my perspective as an economist, that's fundamentally important to be able to get the market to work the way you want it to work. So from that perspective, your research is fundamentally important to making sure that the investment market here in Ghana works and functions efficiently and effectively and delivers the kind of outcomes that the country wants and needs. Investment, good quality jobs, a future and aspirational prospects. Those are all fundamentally important. If you don't have those, your quality of life tends to be pretty poor. And we certainly don't want that here. But beyond that, one of the components of a good functioning market is collaboration. I've heard the word collaboration at least 5 times this morning because I've been counting. Part of our role here is to be collaborative. And from that perspective, I'm very appreciative of Impact Investing Ghana for allowing us to collaborate on this project. I wish you a successful launch. Thank you very much for being here. And we want to see more outcomes and more collaboration. Thank you.
Thank you very much, Sean. I think that the theme is clear. The speeches are short, straight to the point, and they're very nice. If you just joined us, this is the launch of the preliminary or summary of the state of impact investing in Ghana. It's happening here at Osu in Accra. It's a hybrid event. We welcome all our viewers on Facebook and our listeners on City FM and also our participants on Zoom. In line with the spirit of the program, we're going to take 2 quick pre-recorded, you can call them solidarity videos, from the Chief of Market Global Steering Group, Christina Tora. That will be followed by another one from the CEO of the Ghana Investment Promotion Center, Mr. Yofi Grant. Even though they are pre-recorded, there's nothing wrong with giving them a round of applause.
Hi, everyone. I'm Christina Tora, Chief Market Development Officer at the GSG. Thank you for inviting me to make a few remarks. We are, at the GSG, absolutely delighted to see the launch of the Ghana Impact Investment Ecosystem Report. This will allow the Ghana market to become even more conducive to driving more capital towards the SDGs and a just transition. This is an important milestone for 3 reasons. 1, it has been locally led by the Ghana National Advisory Board, and it is therefore a collective effort that highlights 10 gaps, but also provides solutions for investors to invest for development in Ghana. This report and its solutions are totally aligned with the recommendations of the G7 Impact Task Force that we led last year. Second, this report also provides data and information that helps investors and potential investors to become more familiar with the market opportunities and the specific context of investment in Ghana. This will potentially lower, perceived risks for investors and increase the likelihood of investment, especially into the SDGs and perhaps also in SME finance in Ghana. Third, it also highlights the need for catalytic capital coming from DFIs, for instance, that will enable the mobilization of significantly more private capital, potentially also unlocking local sources of private capital from pension funds, for instance, and this all across all asset classes. Amongst others, this will potentially help solve issues related to SME finance, which in the end will enable improved livelihoods for millions in the country and also a more impactful economy. So we're very supportive of this great work. We're happy to see it come together, and we are looking forward to seeing it come to life with so many investors coming in and contributing, collaborating as a result of this report.
I need to express my appreciation for the partnership in this research, and GIPC, being the country's investment promotion agency, is always at best trying to find investors for potential investment opportunities in Ghana, and how we can actually make them happen from proposal into real businesses. So we are very glad that we have been able to work with the team to come up with this research. I think from my perspective, the most important aspect of all this is the fact that startup capital in itself is hard to find, because most of our companies are SMEs and SMIs, and therefore do not hit the radar with the asset classes that most investors require. But even more so is in the SDG space, where erstwhile and in the past, most of these were looked at as projects and not as actual opportunities that existed that return commercial value. Indeed, Ghana was the first country to benchmark SDGs in its budgetary process to ensure that government was not only funding developments, but developments that impacted or were clearly synced and aligned with the SDGs. So without a doubt, that's a critical area for us as an investment promotion agency to focus quite a bit of our attention. And in that space, the very important solution that was identified is how to synchronize external catalytic investor or capital with the local catalytic capital providers to have a clear understanding of the space and understand what the needs are so that they can be met and there might be a consensus on how to address those needs. Indeed, that is very much like looking at startup capital for most of these small companies. And just not that, because even for those who are in business and are ongoing, the next stage capital to move them into the next stage, into growth phase, is also almost always a challenge. And therefore, it's important to pay clear attention to catalytic capital providers, whether external or internal, because they actually then can build a consensus and a whole set of criteria which any such provider needs to contend themselves with if they are looking at some of these projects that require startup capital as well as growth capital. And catalytic capital actually does one thing. It sort of helps de-risk the opportunity, but also then creates space for other types of investors to come in. And for us at GIPC, part of our job is to identify those opportunities and look for specific investors who can meet those opportunities and actually take them the step forward from actually becoming entrepreneurs or ideas into actual businesses. But even more so when they satisfy what we call SDG criteria. And I dare say that Ghana is rife with such opportunity. And Ghana, as a spearhead in the whole SDG achievement, track, is very keen and very excited about this research and the doors it opens to let investors understand, as well as to let investee companies understand what is required of them to make this work. And therefore, I am very happy that GIPC partnered into having this report done. Many of the other partners are all in the space, and therefore also looking to see how best to open up and broaden the opportunities for SDG financing. Indeed, So I would just like to say that, yes, we are very happy and we are looking forward to continue this partnership with IRGH, on which I sit on the board. And we will look to partner with all the catalytic capital providers to grow in Ghana and to grow with Ghana. So thank you very much.
Thank you.
Let's have fun doing
Grant
the good work that we ought to do. Thank you.
Christina, the trouble with video is you can't tell them you had enough. It's okay. You just have to let it go through. So, and they obviously didn't get a memo because everybody was doing like a minute and two, but it's still fine. We're happy they are excited. Christina, from the GSD perspective, UOFI, two very important angles to this conversation. So we're now moving straight into the presentation now, and we're bringing back Amalati, CEO of Impact Investing Ghana, to walk us through some key highlights and gaps identified in this report. Please welcome Amma again.
Thank you, Bernard, for that introduction. As I shared earlier, it's been a 12-month journey. We used a multi-method approach in putting together this research, and I'll just highlight a few of the sort of steps along the research journey. The map used the GSG's 5 pillars of the impact investing ecosystem: supply of capital, demand for capital, financial intermediaries who are pulled out of supply because it's good to see what the connections are between supply and demand, and then also market builders and professional services who enable both the supply and the demand to be effective. So people like researchers, consultants, lawyers, accountants, due diligence professionals. And then finally, government and policy and advocacy. That forms a strong foundation. We used a Delphi team, a team of experts that worked with the research team all through the project, providing unique insights and helping with interpretation of data and bringing historical perspectives and other nuances that you may not get if you went straight to just doing surveys and interviews. And then, of course, we had surveys, we had interviews, we had a lot of research, and we also did a very extensive root cause analysis that ended up with these 10 clustered gaps that are the prioritized gaps by the ecosystem. The full report summary is available for download. So all I'm going to do is highlight one or two things from the report, and then we'll hear from the panel that has real-life experience to share about these gaps and how we can fill them. The first part of the report, Who, What, Where, is a summary of the mapping. A live online map will be available later during the year that will continue to be updated. And in that summary, you'll see some of the normal things you'd expect if you know Ghana. Banking dominates the supply of capital. And there are some banking products that have impacts, that have lower interest rates, are targeting certain populations, women, youth, or certain sectors with a clear impact objective that is being measured. But we also found some interesting participants that aren't always included in ecosystem maps, like our rural and community banks, 145 of them, who are restricted to work within a certain geography and help to fill in banking deserts. And they are an opportunity to continue to drive impact in rural areas and a key feature of the impact investing ecosystem. There's, of course, pension funds and pension trustees, 27 of them, and individual pension trustees managing 5.8 billion in funding. And they are very innovative structures like faith-based organizations, a number of major insurance companies that are owned by faith-based organizations, by churches, and also our traditional ROSCAs, rotating savings associations, that are now getting digitalized using mobile money wallets and providing very innovative structures, very small but innovative structures for impact investing to grow. There are also crowdfunding platforms. There were 7 that were active, all using very interesting models, also small, but an interesting place for innovation for impact investing. Part 2 looks at the 10 most critical gaps. So these gaps aren't all the gaps. And some of them are composites because we kind of clustered them together. But they come with root causes and recommendations and a list of the folks we think need to execute the recommendations. And if you find your name in that list, we're coming after you. And we're expecting that you will be, and many of those organizations are already collaborating, already working on the initiatives that have been identified, but we want to see accelerated action. And I'll just highlight 2 of those gaps. The first one, gap 1, is the fact that there are limited local financing vehicles and limited local institutional funders for impact. And there are many reasons for this. Venture capital is an emerging industry in Ghana, and so there's not a lot of funding, especially for emerging fund managers. And the structure is not quite the Silicon Valley structure. Go do a fast-growing company, IPO, get a ton of money, and then go and invest similar. These are professionals that have worked in impact funds, have done a ton of deals, and are now setting up funds. But there is a licensing process. There's the fund setup cost. And because the licensing can take a very long time, maintaining the team over that period can be challenging. And so it calls for innovation in building a track record together for the team. And there are other root causes about why local institutional investors aren't investing in impact. And we got this straight out of the horse's mouth from our Pensions Industry Collaborative, and we brainstormed together about what needs to change. So the recommendation for that gap is to create de-risked pooled funds. So to get institutional investors to move, they need to know they won't lose the money. It's our pensions. And so if they can have a guarantee or another mechanism that ensures that their risk is minimized, then they will move, or so they have told us. And if also they can minimize their risk, instead of having a risk in one fund, being able to pool that so the risk is shared, that could cause money to move. There also need to be fund manager development programs, and the Venture Capital Trust Fund is already developing one that is going to roll out. And there needs to be capacity building for institutional investors so they understand this space. Peer learning, structured courses, and already the Chamber of Corporate Trustees and others are organizing these trainings and building the capacity of the sector. And finally, there needs to be increased visibility. So this just gives you a sense of the flavor of root causes and recommendations that you will get from the report. They are divided into 2 halves. The first relates to supply and demand of funds, and the second relates to the ecosystem as a whole and some of the softer issues. So I'll skip to gap 7. Gap 7 talks about inadequate relevant research, data, and insights for the ecosystem. And it talks about why this isn't happening. There isn't enough connection between academia and industry. There is inadequate funding. We don't have a very strong national research data infrastructure. And we don't have models of effective research commercialization. And already there's action in this space. We talked about the Ghana Impact Investing Research Industry Collaborative. But the solutions recommended is government, development partners, and we've listed specific institutions. And Impact Investing Ghana should commission research to fill some of the data gaps. We should build databases of existing research, which is already ongoing, and deepen academia-industry collaboration to be able to increase funding, dissemination, and commercialization of research. So these gaps give you a sense of what kinds of things you'll find in the report. Our 2 panels will be reflecting on the demand and supply of capital and the wider ecosystem issues. But the report has a very interesting section called the Nucleus of Change, which is really a model created by the Delphi around the soft things that need to change if we should have exponential growth. And those soft things were a culture of innovation, mindset change, building a high-trust culture, and some of these other softer, intangible things. And we need to be intentional to make sure that we're growing these things as we take the practical steps to do research and move funding. And so we have a nucleus of change that we will be following. We believe that those are the levers that we need to move to be able to move capital. So thank you for being here, and I hope that you'll all enjoy the reading the report and download it from impactinvestinggh.org.
Thank you, Amma. So we're making progress. Thank you so much for making it so concise. There are many, many gaps, and the two panels would look at some of the gaps in further detail. But before we get into the discussion, we'll show you two quick videos. And while we're doing that, I want to ask my first panel group to come up. And for the avoidance of doubt, this is the GVCA panel. So basically, we're dividing the panel discussion into two. We identified what is called ecosystem and nucleus of change issues. And then we also have supply and demand issues. So as you notice, the gap 1 deals more with the supply and demand type of thing. Gap 7 deals more with the ecosystem kind of thing. So let me ask GVCA, Beniza, Arthur, and Hamdia to join me here so that we would get into a conversation around some of the identified gaps within building the ecosystem. Now, the logic of the panel discussion is to really get industry people to discuss their experiences with some of the gaps so identified and come up with recommendations as to what can be done. Now, we also felt that it made more sense to deal with the ecosystem issues properly before you then get into demand and supply, right? So, for example, we're talking about impact investing not being recognized and understood properly and all of that. So, before I come to the panel, I'll just show you two quick videos of some perspectives from, incidentally, GVCA and then Chikodi.
Distinguished guests, ladies and gentlemen, on behalf of the Ghana Securities Industry Association, GSIA, it gives me great pleasure to be called on to give this address to this forum on the state of impact investing in Ghana. Impact investing is no doubt an exciting step in the evolution of responsible investing by directing investment capital into asset classes and securities with the attainment of delivering positive financial returns and society benefiting being the twin objectives. There's no doubt a compelling case for impact investing. The question for many local investors is how to capitalize on such opportunities. Even though there's been talk of impact investing in Ghana, we do not have a standard for what constitutes an impact fund or impact vehicle. Having a common discipline and market consensus on how to manage impact investments will, for example, help asset owners differentiate impact investments from other opportunities and enable us to follow best practices in managing funds for impact. We at the GSIA are very excited to partner Impact Investment Ghana, and we look forward to interacting on how we integrate environmental, social, and governance factors into our investment processes and how capital can be deployed to generate impact outcomes that have positive and measurable impact on the environment and society, while simultaneously delivering financial market returns. Thank you.
The British Council is committed to making positive change in the long term in the areas of arts and culture, English language, and education in general. We exist to increase prosperity and peace by building trust between the people and the institutions of the United Kingdom and the rest of the world. We focus on creating opportunities for young people and the next generation. We do support the idea behind the launch of the Ghana Impact Investing Ecosystem Report, and we are delighted to see this work unfold. I think the gaps that were highlighted in the report are germane, particularly the gap 7 of the report, which alluded to the inadequate collaboration between ecosystem players, including asset owners, financial intermediaries, and enterprise support organizations, and so on. In my view, it is important that these intermediaries work in sync in a collaborative manner for the desired result to be achieved in Ghana. Thank you very much.
Thank you very much. This is still the launch of key aspects of this very important report that Impact Investing Ghana put together. Who is on my panel? Ebenezer Arthur sat next to me, founder and CEO of Wangara Green Ventures, an impact investment company in Ghana, West Africa, with catalytic capital from the World Bank. Wangara's objective is to catalyze the growth of the green economy in Africa, starting with Ghana, by providing green SGBs with patient capital and technical assistance for their growth. He co-founded InnoHub, a business accelerator, previously worked with EY, where he did advisory across West Africa. He has an MBA and many areas, entrepreneurship, certificate in climate change, and he also studied at Imperial College London, and he is also an alumnus of the Oxford Impact Investing Program, and he's a 2019 Aspen Ideas Festival Fellow. For such a young man, you've done so much. Please put your hands together for Ebenezer Arthur. Again, next on the panel is Hamdia Ismaila, sat in the middle. Hamdia is a glue in the industry. Everybody knows her. But for those of you who may not know, she has over 2 decades experience in finance and investment, doing VC, PE investing. And she's led venture capital and private equity ecosystem development in Ghana through educating and influencing policy and regulatory outcomes for the industry. She's currently the general manager for VCTF, which is Venture Capital Trust Fund. She oversees the investment and general operations of the trust. She manages the Venture Capital Trust Fund Technical Assistance Facility, which is designed to support fund managers and build the capacity of investee companies. And she worked with the Ministry of Private Sector Development prior to VCTF. And she's also an angel investor, was instrumental in the design of the Ghana Angel Investor Network. So, ladies and gentlemen, Hamdia Ismaila, please put your hands together. And last but not least, we are privileged to have Kisei Antonio, Managing Director of Sentinel Asset Management. Proud to Sam, he was the Managing Director of EDC Investments, the Ghanaian subsidiary of EcoBank Capital's asset management business. He also doubled as Anglophone West Africa Regional Head for EcoBank Capital Securities. Done lots of things in this space, but I'll skip some of those and simply say that he's also a member of the Board of Trustees of the quite a number of important institutions, including, I'm just looking for my script, Venture Capital Trust Fund, and also Vice President of the Ghana Securities Industry Association. And so ecosystem issues, hint, hint. He served on the steering committee of the SEC's Capital Market Master Plan. So he's an industry person. He's respected. He's known. And so if there are any hard questions, I'll ask him to answer them. So that's what I'm going to do. So a couple of things. So we are discussing the ecosystem. I think Impact Investing Ghana is very important in bringing the ecosystem together. I just wanted to take your preliminary comments about the state of the ecosystem, right? How, are the component parts, is it even an ecosystem? You know, because you can have a little bit of science. Ecosystem is they are interacting, they are working. You can have just things lying in a room. It's not an ecosystem. They are all there. They have names. They are relatives, but they are not an ecosystem. An ecosystem means there's interdependability, there's working, there's life. Would you say that we have an impact investing ecosystem, or we just have disparate individual blocks working at cross purposes? I'll start with you.
Thank you very much, Bernard. If you had asked me this question probably a couple of years ago, my answer would have been a strong no. But today I think we have a very strong emerging ecosystem. It's not yet where we all want it to be, but I think that we have what now looks like a coordinated ecosystem. And this is in part thanks to some of the good work done by IIGH, as well as other organizations. And I think Hamdia is on my left, and they've been a strong catalyst, you know. Usually people look at them from how much money they've given, but people don't see the work they do in the background. And we now have the Ghana Venture Capital Association. And so I would say that it's emerging. There are still some pieces that we need to bring in. For example, I mean, most of our conversations still don't capture the lawyers. It doesn't capture our judiciary, right? But we are first trying to bring in those that are at the core of it. And as you can see from what Amma said, there have been some key collaboratives. First being the collaborative of the ESOs, which are what we call the enterprise support organizations. These are the hubs. Now they are talking together. Right. There is also the collaborative for the research, which is now trying to bridge the gap with academia. And more importantly, where the cash is coming from, the collaborative with the pensions. So now we are speaking together, the regulators are involved, the actors are involved.
So financial intermediaries, the ESOs, the asset owners, they are all working. We have to bring in the legal people.
Very important.
Fantastic. What are your initial thoughts, Amdia? You've been in this for over 20 years, and we are still told that we don't even understand impact investing. It's not even understood. Charlie, that's serious. Spend 2 decades of your life doing something that people in Ghana don't even still understand. What are your thoughts on the ecosystem generally?
Yeah, thank you, Bernard. And generally, I think I just want to add 1 or 2 things to what Ebenezer said, because he's summed it up very well. It's taking us time to build, to get people to understand, and I think what has been missing has been a lot of data, and which makes this report very, very important for the ecosystem. So we get to know who is where and what they're doing so that we can begin to collaborate more. As you said, there were all these pieces together, but there was a need to bring them together, which IIGH is doing it so well. So that's where we are. And after that, then we'll begin. You need data to be able to give information out to people. And I think the reason why the learning has taken us a bit longer is because we didn't have a lot of information. And you know how we are. People will ask you, where is the data? You know, who is doing what at where? This mapping is going to show us where people are so we can target better, we could work more, and also put them in groups. So what IIGH is doing is the CSOs. They are the ones who build the pipeline. The investors are complaining that we don't have good pipeline. So when we speak together, we are able to say, look, this is what we need. This is where the gaps are. So in your training, please focus on this, that, to make it more attractive to us. We have the pension collaborative, and the discussion has been, well, we are not looking to invest in the asset class because we don't understand it, because we think we need to see how the risk is, we don't understand the risk profile, and things like that. And during that conversation, we've been able to pick out a lot of concerns, and we are working on them. And so I believe as we work together, we will build a very solid ecosystem for Ghana.
Thank you. Kise, thoughts on the state of the ecosystem?
Thanks, Bernard. I'm pretty aligned with what Ebenezer and Hamdia just said. But I'll just take it a bit further. You know, I think talking for asset owners, right, being an asset manager, I think it's important that stakeholders are all aligned. And I think Amma done a fantastic job. Like you said, I also get several of those emails. I think I was telling her. I can't tell her that at times.
There's no rest for the wicked.
I roll my eyes. But it's important we are all aligned. I mean, for me, when we talk about impact investing here, people think about things like pollution prevention, you know, affordable housing, access to healthcare, female empowerment, and what have you. But is that impact investing within our sphere? I mean, I think I said at one of the earlier fora that maybe about a year ago, I read an article in the Financial Times online where Temasek, one of the Singaporean sovereign wealth funds, had made an anchor investment into Leapfrog. Leapfrog is a private equity company basically they invest in companies which they talk about financial inclusion, bring financial inclusion and healthcare to the doorsteps of underrepresented or underserved communities. Okay, Leapfrog has invested in a life insurance company here, which was exited to Prudential. Prudential bought that stake. They were invested in one of the large pension trustees here, which they exited in a secondary buyout to another private equity entity. I mean, they also invested in World Remit. I mean, when my siblings outside are sending money to my mom, they do it via World Remit. Now, if I have an impact fund in Ghana and I invest in these companies, would we consider them impact investments? Or it's when I invest in something which has to do with female empowerment or pollution prevention or access to healthcare, that's when we'll say we're making an impact. So I think it's important that we have a market consensus, and this is why I talk about alignment of stakeholders, to determine, what investments an impact fund can make, what we term an impact investment, and how do we basically establish and state, financial, social, and environmental objectives for these investments.
Fantastic. You notice there are about 4 or 5 gaps identified under this. I'll summarize those gaps and zero in on one. So there's the gap of the fact that impact investing is not widely understood and there's no shared understanding. You've alluded to this. This is gap 4. Gap 6, I think you said 7, but I thought it was 6. There's inadequate relevant research data and insights from the ecosystem. You dealt with that nicely. And then the issue of collaboration, which sort of we have hinted to. But there was a gap that I thought was interesting. Gap 8. Innovation, experimentation, and change are not adequately encouraged and pursued by ecosystem players. Into brackets, asset owners, government, where is the government? Regulators, I don't know if there are any regulators here, and market builders, especially in addressing major gaps in the ecosystem. I want your comments on this idea of innovation, because yesterday I tried to pin the DG of SEC on this issue of innovation to develop the market versus making sure we stick to the rules. And there's always this balancing act that needs to be struck. So on the question of innovation, what are your thoughts? That the gap is that we don't encourage people to be innovative. We say a lot of nice things. But at the end of the day, when you're going through the numbers, you still want to make sure everything is based on what was taught 20, 30 years ago. So I don't know whether you start. What are your thoughts on this need for innovation, this gap that has been identified?
Thank you. I think Amma mentioned the nucleus of change. And I think the first thing was the culture of innovation. And this means coming up sometimes with products, with concepts that we are not used to. Typically, in every country, regulators will not be so comfortable with something that is not well understood and well controlled. I mean, we live in a country where we've seen things like various Ponzi schemes come up, and we are having to deal with these. So that part of it is very, very important. But in a sector like ours, we need to be innovative. We need to have new fund structures. Something like venture capital has been with us for a while. That really is one of the engines of impact investing, right? But we now have guidelines, right? Before, a few years ago, we did not have guidelines. Now, when the guidelines come in, that means that you can't just do it how you want to do it. You need to follow those guidelines. That's where the SEC comes in. And what you see is that in the past few years, there's been a lot of discussions. So I would say that we are fortunate to have a regulator which is very open-minded and willing to work with the industry. So when it comes to the guidelines, for example, the regulator's body language is not, these are the guidelines, just take it. And I think yesterday you noticed that Reverend Obami mentioned that if anyone feels anything needs to change about the regulations, come to us. So we have some of these regulations that will change. But then when you get those regulations come in, first it's about identifying that these are now regulated You just can't do things your way. And then when you go in there, you seek to make your
So you are
recommendations.
basically saying the regulator doesn't stifle innovation as we think.
I don't think that's been the body language in the past couple of years.
The regulator being SEC.
SEC. And
sorry, to recognize there are multiple regulators here within the ecosystem. You could even have MPRA as a regulator. Because yesterday we were told that the anchor investors were people from the private pension side. In a sense, GSE can even be a regulator, depending on how somebody chooses to exit. So I want you to deal with this not just from an SEC perspective, because GAP 10 says the current policy and regulatory environment do not sufficiently enable investment. So I want us to look at the regulatory environment together so that we can deal with the problems.
Yes, and just a quick one. Just remember that the language is sufficient. And I think that we need to be very careful not to paint it as though nothing has been done. So let me take, let's say, even start from the top, policy. Ministry of Finance, for example, we used to have incentives for funds, right? 1%, it was removed. Engagement was done. That's been restored. There is even an incentive for investors in funds where they can have a tax break for whatever they invest in early-stage businesses. There's not enough education on that. When you go to the BOG, they've recently come up with the principles for responsible banking. Not only that, they also started the regulations for crowdfunding if it's to do with debt, right? It's to do with grants or grants. And the SEC also has a sandbox. And when I say a sandbox, it's just a system that says, we don't fully understand this. We know you need to innovate. Let's do this together. As you're doing it, we'll regulate you. If we need to put in some rules, we'll put in some rules. If we need to allow you to do certain things, we'll do it. So there are currently companies that are going through sandbox or even crowdfunding with the SEC. And MPRA in particular, you would see that with all the engagement that's going on, recently they've now increased their allocation to alternative investments from 15 to 25%. That is not to say everything is perfect, and that's why we say not sufficiently there. There are things that are still missing, like we need a limited liability partnership, because most institutional investors coming from outside are used to that. Not just being used to it, but it provides certain protections for investors they want to see.
All right.
So
let's take comments on the same point, on the regulatory environment, policy environment, innovation.
Yes. So, I mean, Ebenezer has said all of it. I think the sandboxing from SEC, it's a good posture for the market. That is what encourages innovation. I know initially crowdfunding was a problem because they would come after you and say, we need to understand what you're doing. But over time, they've created this sandbox and they are dealing with it. And I think sometimes, I mean, I like the word sufficient. We don't have sufficient regulation. That is true. But we also have to look at where we're coming from, right? So private equity venture capital wasn't regulated in Ghana for some time, right? So the Securities and Exchange Act was reviewed in 2016. And it was only in 2016 that SEC was actually given the opportunity to regulate alternative assets. Okay. And after that, we needed to get regulation, because that is the law. Now we need to get regulation to implement it. And that's where we are all trying to build from there. So it's taking us time, but we'll get there. Now let's look at NPRA. NPRA, when the law of NPRA was passed in 2008, it was amazing that even the asset allocation was built into the law. It was reviewed, and asset allocation has to be reviewed every 4 years. It took us how many years? About 6-7 years in 2016 to put in alternative assets for the first time in the asset allocation by NPRA. And then they just reviewed in 2021. So we are making progress. So we moved from 15% alternative asset, 10% cap on REITs and VC. Then we came to 25%, and they've added their forex. They have about 5% forex that they could do. So we are building. It's not sufficient, and that is what the data has captured, and which is very true, which is what it is. We need to build from there to be able to get a more sufficient, regulatory environment to support the asset class better. So the Limited Partnership Act, for example, is something that currently we are discussing with Securities and Exchange Commission and the Registrar of Companies that we are going to actually start rolling that discussion, setting up the policy to be able to start working on the limited partnership. When that comes, it will unlock further more funds, because it's really a more transparent, act for the formation of venture capital funds. So we're getting there, and we will make it more sufficient.
Fantastic. Is there any additional points on how we can really drive innovation and how the regulatory environment can speed up? Because we're an emerging market, we're a developing country. We need to be moving much faster than settled, advanced markets. I know the risks. I know people are there to do Ponzi schemes and things. But we also need, because everywhere it's private sector that brings the innovation, and regulation catches up. Even with fintech and all these things, it's the private guys who come up with the thing, and then government thinks and says, okay, how can we make this thing? How can we set the rules properly? And you've worked in private sector for many, many years. So any additional ideas on how to drive innovation to really get this thing to become the mainstay in Ghana?
I was telling Hamdia that Ebenezer had said it all. But let me just add one or 2 points. You see, when it comes to impact investment or impact investing in particular, yes, the SEC came out with private fund guidelines a few years ago. I mean, Ebenezer made a great point about us having putting in place, that limited partnership structure, because it's very important. I mean, we talk about wanting to be a regional financial. And we need to have laws. We need to have laws in place which will help facilitate to us being that regional financial hub. And I think quite a number of the laws are antiquated. I mean, if you want to drive venture capital and private equity, I mean, everywhere it's limited partnership structures they look at, where you have the manager being the general partner and investors being limited partners. What we have, where you have to set up a company with investors being shareholders, I mean, it's only Ghana I've seen it, and I think we need to change. You see, there's been a lot of talk, but now we need action. We need action. We all know, and we've been talking about this for years, but for some reason, it's still talk. So now, I guess with AMES advocacy, we can get some traction on that. NPRA, fantastic job, increased limits 25%. And I guess when it comes to innovation, I dare say the onus now lies on we, the fund managers. I talked about us having a uniformity standard as to what impact investing is, as per our climate. But I think regulators, asset owners, industry, and advocates like IIGH, need to work so that we can, I think I initially said, we establish, what social and environmental objectives we want to pursue, to relevant stakeholders. Important that we set performance matrix related to these objectives. Basically, we should try using standardized matrix where possible. We should also, have the framework in place where we can monitor and manage the performance of these investees, companies. We put money in against the social and environmental targets we established. And lastly, we should be able to, agree on how we report on the financial, social, and environmental performance to relevant stakeholders. So I think the work has started. There's still a lot more work to do, but we all hope for the best, and fantastic. I guess we'll all put our shoulders to the wheel. Is that the term?
Amazing. I think they deserve a round of applause. Put your hands together for the panel. We've been speaking to Ebenezer Arthur, who is CEO of Wangara Green, an impact investment company. Hamdia is with VCTF. She's the general manager. And Kisei, we know, is the MD of Sentinel Asset Management. So I think the gaps identified within the ecosystem are pretty clear. The shared understanding gap is being addressed just by the existence of platforms like this, right? The relevant data research gap, again, we need to bring academia in, but even the fact that we are here because of a research report and we are discussing it in great detail is I have done a few moderations. I haven't had a moderation where you have two panels on one report and you divide the gaps with solutions. I've never seen that in my life, even on the economy. So this is really great. Then the issue of collaboration, at least we identify the component parts that are not very active. Asset owners are here. The money guys are here. The law people are not here. No regulator is on the panel, but at least it's a start. The industry guys are talking to each other. So I think we shouldn't be too hard on ourselves. I think the innovation gap is where there's a different views around what to do. But I even feel with that, if you look at what MPRA has done and what other people have done, it's quite clear that things are better than they were like even 5 years ago. And I think IIGH has done a great job. Let's put our hands together for them and the panel. Thank you very much. Please take your seats. They are called rapid fire panels for a reason. We are not here to, it's not elaboration. It's more thinking on concise ideas. My second panel will take their seats. We'll take 2 quick videos.
Hi, my name is Josiah Asen, currently the chairman for Ghana Hubs Network, which is the umbrella body for 52 hubs and counting across the various regions in Ghana. I was delighted to be part of this research because they allowed the hubs to have a voice. They have the hubs to also play a role in this whole research and highlight what it is that we do. So that was very important. And to be able to then further partner with other stakeholders to build a platform that hubs can use as rating systems to show the programs that we run. It was moving towards the direction that the network wanted to move into anyway, in regards to the fact that it shows about standardization, things that we want to bring to the ecosystem, so the whole ecosystem is moving in one direction, whether it's curriculum, whether it's programming, so that we can gauge out the right information of what is happening. And so it was great to kind of partner. Now, the question about needing more funds, it goes without saying. Hubs generally become the front-facing service providers for some entrepreneurs that are not able to provide or pay for the services that these hubs provide. So naturally, we asking for government, we asking for other donor agencies and funding agencies to fund a specific aspect of the training that we do. This allows us to be able to offer more training, more support, and ensure that we match up to standard and what is needed globally, and so that nobody's kind of left behind. Because if entrepreneurs at the bottom of the pyramid cannot afford to pay for our services, but they're the ones that need these services the most, then we need to find innovative and strategic ways in which those services can be paid for. So this is why we're asking government and other agencies to support us in that respect, so to say. So looking forward to working with everybody, and thank you very much.
Good morning. My name is Yvonne Ofosu-Appiah. I'm the Chief Investment Officer of Wangara Green Ventures and an Executive Committee member of the Ghana Venture Capital and Private Equity Association. The GVCA is delighted to have partnered with IIGH on this report and to witness its timely launch. Impact investing is still evolving in Ghana, and to catalyze its growth, there's the need to have a strong ecosystem marked by active impact investors, fund managers, entrepreneurs, and other support organizations. One of the biggest gaps we have seen in the industry is the limited number of impact vehicles and fund managers, as well as the inability of funds to pool local long-term patient capital into impact funds. Clearly, this calls for action, especially now that we see a lot of emerging fund managers with innovative fund structures and business models to support the growing number of micro, small, and medium businesses in Ghana. The GVCA, in partnership with other major players in the industry, including Impact Investing Ghana and the Venture Capital Trust Fund has therefore initiated a number of programs such as Fund of Funds program and the Fund Management Development program to ensure the growth and stability of this asset class. With the launch of this report, I see an exciting future for impact investing in Ghana, and together we look forward to a continuous partnership with IIGH to implement the solutions to the findings of this report. Thank you.
She's up to. Amajampo, tell us a bit about yourself. I'll start with you. I can't see where I wrote your intro. So tell us a bit more about what you do. And then this panel is really looking at about 5 gaps. So maybe let me do the panel's remit. Okay, here it is. Amma is the founder of B2B Entrepreneurship Development, Scale Up Africa. She designs and implements cutting-edge program solutions. So really in the accelerator, incubator space, Amma has done a lot of work. They are the guys who support the businesses. I think Amma is very big on that. And she advises, she consults. She basically is a SME's helper. If you're an SME, you want to do better, Amma is your woman. I hope I've introduced you the right way. All right, put your hands together for Amma. Fantastic. All right, so this panel is going to look at the gaps in terms of supply and demand. So, for example, gap 3, there's a mismatch between demand and supply of investment funds. Why is that? What can we do about that? The enterprise support sector is growing, yet there are inconsistent quality issues. There are gaps in available services. There's also the issue of gap 9, low capacity of businesses in Ghana, especially in working with long-term capital providers. A lot of businesses are emotional. People want to die in their socks. They don't want to do best practice. You can't tell me how to run a company my grandfather founded. If you take your money, that type of thing. So these are the gaps. So let me just take your general thoughts on the supply and demand gaps that were identified in the report. Then I'll drill down into this. I'll start with Amma. It's on? All right. Let me see. I think your mic is off. Please come for this mic. I will borrow your mic.
Thank you, Bernard, and good morning, everyone. I will speak from the entrepreneurship support side of things. I mean, we see a lot of SMEs that need a lot of work. Quality is definitely an issue. We've looked, as Impact Investing Ghana, at how to have more consistency in quality. We certainly need a lot more work on how SMEs are structured, the ongoing long-term support that they need, from accounting to compliance to IP protection to branding. The whole gamut of business services is something that we need to get very serious about supporting from a high level in terms of, the foundations and DFIs that could support that kind of work in the longer term. So demand-wise, every investor in the room will tell you pipeline is an issue. The quality of SMEs that we even have available to even consider for funding is a massive challenge for everyone, whether you're an angel or you're more advanced. It's very difficult to find the right quality of SMEs. So we need to allocate more resources and support for the ESOs that support the businesses and have a longer-term view on what that process looks like in terms of investor readiness, fundraising services. We provide those services, but we need a lot more of that out in the marketplace.
But are the ESOs themselves on the money? Because there's so many of you. There's accelerators, there's incubators. Are you the ESO serious yourself?
It's getting better. I think we're calling out our shortcomings. Some of us are members of hubs. We have a Ghana Hubs network, which is thriving. We have the ESO collective, which Impact Investing Ghana curated and pulled together. That is something that we are really pushing to get more people from the wider stakeholder group involved, so we can look at how to, address the quality issue. And we now have a bit of a framework in terms of global best practice that we can refer to and bring more people into the space of quality and standards that we can expect.
Fantastic. Sam, what are your general thoughts on the report and then the gaps that have been identified?
So I'll pick up from where Amma left off. Now, where there definitely is some information asymmetry between the capital providers and the SMEs, and I guess Amma mentioned the fact that the ESOs are partly to blame. Because if you're preparing companies for capital, then you need to ensure that they understand what the investors are looking for. So where there's limited capital, there is this issue of information asymmetry.
But I want to talk about the broader mismatch between capital supply and demand in Ghana. Yes. Because what you would hear is there's a lot of money, but there aren't enough deals. But when you peel the onion, what you will find is that the capital chasing deals in Ghana, the average ticket size is much higher than what SMEs in the country are looking for. Now, on Amma's slide, she showed 38 private equity and venture capital firms in Ghana. Of those, only 8 are indigenous fund managers. The rest are foreign players, either domiciled in Ghana or operating remotely. Now, what you would find is that it's the local players like the Injaros and the Oasis who prefer to do the smaller deals. If you look at what has been coined the missing middle, these are businesses looking for capital anywhere from the equivalent of $50,000 to $2 million. And that's where most of our SMEs are. You would find that most of these international players are looking to do ticket sizes of $5 million and above, which is more than the market currently wants. And so the report talks about how we address this gap. And I think that once we've had the opportunity to talk about the other issues, we can talk about some of those recommendations as well.
Mirabel, I think your example yesterday is, we are not here to just discuss problems. I think what Injaro has done with your first phase and what happened yesterday are good examples of what can work. So tell us what made your phase 1 so successful, which then led you to launch yesterday with the 150 million CDs with these companies coming on board as well.
So Injaro has been in the investment space for over a decade, and our first fund was really catalyzed by DFIs as well as family offices and foundations. And I would say the journey started with the family offices. So it's quite important to have that catalytic capital. Otherwise, the story is just a pipe dream. Once we had those catalytic investors, then the DFIs came on board en masse. So we had CDC, Propaco, FMO, all together in the first fund. What we learned very quickly was the FX pressure in being in a fund that's having all these investors who are foreign was just very hard given the performance of the companies. In local city terms, the companies are fairly decent. But in FX terms, they are horrible. We're negative returns, and that's not working. So then we spent time going around, talking to local asset managers, trying to get funding. And frankly, it didn't go anywhere for a long time until the regulations changed in our favor. And so here in Ghana, we actually have a very healthy relationship with our regulators, and I'm hoping that continues into the future. So yes, we don't have all the regulations we need, but at least they're in the right direction. Once the regulations switch, we've been focusing a lot with Hamdia and all the other industry players on educating the asset owners so they understand the work we do. Because yesterday, everyone talked about fiscal dominance. We are very happy as a nation putting our money in government's bills. As individuals, as asset owners, this is what we understand well. And, you can't blame us for doing that. But then the development in the real economy is hampered, and we don't see the kind of changes we need to do. So hence, in Jaro yesterday, we launched a 150 million Ghana cedi vehicle. This is the first vehicle in Ghana for private equity, 100% so far anchored with only local asset managers. We don't have any foreign money in it yet. And when we do get foreign money, it will actually be an investment in cities. And we're doing this specifically to be able to lend to the companies that need them, to grow them, and then to demonstrate to the asset owners that these variable income investments are not, just wishful thinking. This is very, very critical parts that they need to have as part of their diversification.
Wow. Amazing stuff. And for me, one of the things that struck me as you spoke is that it looks like for you, you are working both ways. You are dealing with asset owners and explaining to them the dynamic at the bottom. And then the guys you are helping as business, you're also explaining to them the expectation from the top. And I feel that level of ambidextrousness is what a successful PE company or vehicle manager should have in this current ecosystem if you are to succeed. You're basically having to talk to everybody because you're actually the driver of the success of the industry. And I think Injaro deserves a round of applause for what they've done so far. I just wanted to ask the panel again. You know, a lot of times when we discuss problems, so demand and supply of funds, we're looking at things from a very hard side. But sometimes being on air, I think a lot of issues are also solved in terms of mindset. I'll give you an example. We're talking about food on radio today. And somebody said, why do I go to Tamale and you serve me fried rice? Why won't you serve me tuozapi in your hotel? They say, we'll book it 2 days before. So sometimes it's not even lack of something. Just the way people think about things. So I'll come back to the issue of private equity generally. Is there not a block in many business owners' minds about this whole idea of private equity or equity? Right? He just wants to go to the bank, give me 10,000, I'll pay you back. Maybe we should spend a bit more time also dealing with the soft issues of how people conceive a business. What do they understand by the business is for me? What do they understand by someone is coming to give me equity and after 5 years the person will exit? A lot of people don't even understand that. Do you understand me? So maybe we should also focus on soft issues of how people, because I have friends in the US who start a business, 3 years they sell it and they're happy. There's somebody who starts a business and he's 90 years old, he still wants to be the chairman of the board. And he wants his son who has no interest in the business to run it because that's his legacy. Do you understand me? So maybe we need to focus on softer issues on how people think. And not just on the local side, on the foreign side as well. That if you have 10 million from wherever you're coming from, you're coming to a place like Ghana, your mindset also needs to change. That the way you do things there, you understand me? Because if there's a mismatch of thinking, you can have all the money. But if the thinking is knocking each other, you're not going to have any progress. I don't know if the report deals with that. I want your thoughts on those.
Yes, you are right in the sense that there must be a meeting of minds. And that's where the ESO, the enterprise support organizations come in to play a key role because they are the ones that prepare the companies for investment. So as part of the investment readiness programs, we must be focusing heavily on educating entrepreneurs on what it means to go for equity. Now, there's that cultural element in there. My dad is Kwewu. And Ijapadie, I say Wuja Ijapadie. And the mere fact that you have somebody in there who may threaten your ability to do that is a problem. And so the culture, you use the word soft, and it's very important that is incorporated into our programs because our programs currently are very hard in terms of dealing with the business model and your business model canvases and the financial management and all of that. We need some experienced professionals in the ESO space to address this issue.
What can you do to help mindsets within the space?
I mean, we do a lot of mindset conversations. We deal with a lot of women in business, but even the motivation about business, a lot of women are just there to pay their school fees. They don't want to grow their business. They don't want someone coming in to poke their nose in, make their lives more difficult. They just don't want that. So I think we need to also differentiate the viable businesses, the businesses and entrepreneurs that will understand what it is to be in business. If you're looking for investment, you're looking for exit opportunities, you're looking for growth, you're looking for scale, you're looking at, for impact investing. It was very much a philanthropy conversation. And now we're talking about, more publicly listed companies talking about ESG, about impact investing, what that means. Kise mentioned that, what is impact investing anyway? But it's becoming more mainstream, right? But if you're in Ghana or anywhere in the continent and you're looking at business and you're not interested in stock markets, IPO, it's a very different conversation. So I think we need to be very clear about the companies that have the potential to scale, create jobs, contribute to our GDP and all those kinds of things, and the social impact that we need to see. And then those who are quite happily doing their micro, side hustle or family business, that's a very different story.
Yeah. Just a final point. Yesterday when Yao was presenting, this is my final question, on I think one of the companies, he had a slide where on the left side he showed all the hard numbers, revenue, gross profit, and everything else. And on the right he had jobs created, smallholder farmers. And I noticed he spent a lot more time on the left side because this is what all the people who own the money are looking for. But Charlie, you are in a country where unemployment is really going up. People don't have work to do. I don't know whose job it is, but we should also look on the right side a bit more. You said 50-something thousand smallholder farmers, X number of people employed. If for nothing at all, there are people who have work to do. somehow asset owners don't really seem to value that. I don't know whether government can start awarding some tax breaks or whatever. Or if you can trace, how many ordinary farmers did this coffee you produce benefit? Do you understand? Because I think that for an economy like us, we need to invest in what is called value drivers, not just this financialized mess we are in. Everybody's just buying T-bills. And I feel that maybe we also need to speak to the government, because the government's macroeconomic framework as well encourages T-bill buying and all these. Do you understand me? Here you are with, yes, after a major issue of inflation targeting 17%. Do you understand? So and I feel we need to start telling the government in no uncertain terms that the way you manage the economy doesn't incentivize people to actually do what is important. People just buy and sell money, and that can develop any economy. I don't know whether you can say that to them, but I have said it a few times. But I don't have much money, so they don't care.
But Impact Investing Ghana is an advocacy organization as well. So I think these are some conversations we need to have. We talked about legal representation, policy implementation, and representation. We need to have these conversations and guide, the law and policy that would incentivize companies to integrate impact into their businesses. Shareholders and stakeholders, they go together. Communities, economies, it's all part of the conversation. It's not just about profit, it's about purpose.
Well, these are my personal views. These are not the views of Impact Investing Ghana. There's actually a portion where we bring you in. So we felt that because of our time, we would bring the official stream to an end. But there's going to be an offline engagement. But we'll take a short video. And then when we finish, we'll take comments. I see a lot of people here. I see Setu Makwabwa, AGI. I see some familiar faces. I see the advocacy group on pensions in the house. We really need to hear from some of you. I see some donors as well who are here to support. That will be an offline conversation, and then we'll bring the program to an end. So please put your hands together for my panel. So 2 quick videos. We'll now open the floor for some quick remarks. Please pardon me. We'll open the floor for some quick remarks. Just mention your name. You've seen the highlights of the report. You can just identify yourself and tell us if you have any comments, any feedback, any perspective you feel can enrich what we do. Setu Makwabwa is the Chief Executive of the AGI. He will make a comment. Thank you, Seth.
Thank you, Bernard. Just a quick remark. Very much appreciative of all these new emerging areas of financing that is coming into the system. If you talk to most entrepreneurs in Ghana, they will tell you one of their major challenges is finance, especially when it comes to medium to long term. But the surprising thing is that we don't seem to be ready as entrepreneurs to access some of this funding. We were at Ghana Stock Exchange just last 2 weeks, and we were surprised to know that after over 5 years of introducing the alternative stock market, we only have 6 companies in there. I know we've done a lot of campaign on it. We've gone around the country together with Ghana Stock Exchange, educating people, orienting them about the need to be listed on the stock exchange and all that. They've done all the, they've relaxed the rules so much for them. But we still have very few people going on the stock market. So when it comes to alternative funding for businesses, is it a question of projects not being available, people not being interested, or is the fund managers who are not committing enough resources to prepare people to be ready to access such funding? And I think that is the area that we really need to look at. What percentage of your resources are you devoting to work towards preparing people to be ready for such funding? And I think that is an area that we need to work together. I know organizations like us, we have a key role to play, but I think that if you commit a bit of your resources in that area, prepare people in whatever shape or form, that would encourage them to access the fund. And I think it's very important. Otherwise, we will not be able to meet the objective that we have. Thank you.
Thank you, Seth. AGI clearly on board. By the way, the report will be available for download. We'll give you the details. Can I have one at your attention? The report will be available for download, the full report, so you can get into it. We'll take more comments. Any more comments? Yes, madam. There's a lady in front. wants to make a comment? Oh, that's Constance Swanica. Sorry, the mask. Forgive me. The mask.
Thank you very much. I'm very excited to see Anatu here, and then I know Sam as well. I've been in business for over 22 years, and I identify exactly with what Seth is saying. A lot of the times, businesses are not looking for money, but actually capacity building. And I must say, my journey with Anatu was actually what prepared me to the amount of money that we were able to raise from partners and donors, and I actually didn't have to use equity. And it was just that walk with you that really built our capacity. And so I'm very big on what you're saying, that the work that you have to do as fund managers and asset managers is actually very much overlooked. And that is one big thing that I'll throw at you, is to work with business associations and segregate the businesses that are ready to scale. Because there's so many of us in the space. We didn't have to work that painful journey. And Amma knows my story very well. And so I'm really excited to see the work that is being done in the ecosystem. And just to encourage you that there's so much work to be done. But there's so many business owners like myself who really are in the private sector. But I think the bigger conversation and how we then bring everybody together on board is where the real work really then begins.
Thank you very much, Constance Swanica. Any more thoughts? Yes, sir.
Thank you. I would like to say that when we say, oh, my name is Abraham Mensabeli, Venture Capital Trust Fund, and I work with Hamdia, learning from her very much. But I would say that when I look at us in the room, I think that for impact investing or for alternate financing to make impact, we need to reach beyond, in quote, the ecosystem. Where are the lawyers? Where are the bankers? Where are the accountants? Where are the service providers? Because trust me, when that businessman in that village wants to raise funding, the first thing he thinks of is the bank or an accounting friend. And goes to them and is like, I want to raise 20,000, where can I go? When we don't open the doors to alternate financing, like Njaro did, we did it, we announced it, but how many finance accountants or the auditing firms know that Njaro has launched? So a financier goes to, a businessman goes to them tomorrow, says, I want to raise 20,000. And the first thing the accountant will say is, oh, go to the bank. Because he doesn't know that Njaro has launched. So I think that for fora like this, we should bring more people from, in quote, outside the ecosystem, because they are the first point of contact for most of the businesses who need to know about us and need to raise the funding.
Fantastic.
Thank you very much.
Fair enough. And I think, not to hold brief, I think this is why this program was streamed live on radio. I mean, it's not cheap to put a 1.5 hour program on radio, stream it online, and also sort of get it repeated and things. So there's an effort to take it away from this group, which is why sometimes when we use all these nice DFIs and things, what is DFI, what is ESB, you know, we think everybody knows. Even for me, a journalist, I struggle with some of your terms, you know. So let's know that you're right. We are targeting people who have no clue what we're talking about. We don't want to just be in an echo chamber speaking to each other. So point well taken. In that sense, when we go home, please click and like the video on Facebook. Share it on your page as well. Share short snippets on your WhatsApp profile. Let people get it so that more people can get into the conversation. That's how you grow the ecosystem. So thank you very much for that comment. Any more comments in the room? Yes, sir.
Thank you very much. My name is Esso Thomas, Chamber of Corporate Trustees. My brother will tell us we have the money, and I agree. Yeah, I think Amma and Co are doing very brilliant work, and I'm also happy to be associated with IIG for the past 1 year, and I think they are doing a lot of things that the chamber is aligned to. We have identified the gaps in the ecosystem. We have identified those who have the money. We have identified those who want to take the money. and then we are trying to bring all of them together. Certain other gaps have been identified by other speakers, which is very fantastic. But we have other issues also. Like I always say, the private pension space actually have patience capital. We have it. I will always say that. Currently, our AUM is about 30 billion, which is huge. And if you look at 20% of it for private equity funds and a real estate investment trust, that is about 6 billion, you know. But the question is that, apart from Injaro, which some of our members partnered, how many PE funds do we have, PE companies do we have? And then if you look at diversification, I don't think any trustee or the industry will want to give all these 3 billion to Injaro alone. It's going to be a huge problem. You know, so we will also advocate for the fact that we need investors who come to that space because the money is there, it's available. But we need investors who come to that space, structure products that meet the requirements of the corporate trustees. And I can bet you the corporate trustees will buy into it. We've been fighting for diversification. 80% to GOG bonds is not something that we all ascribe to. We actually want to diversify. So, I mean, if there are investors here, we'll plead with you that you take this one up also. The second thing I think is also something that we are really looking at is the capacity building. My conversation with Alma yesterday is that if you don't have the capacity, why will you recommend to buy any asset from PE funds or even give money to a PE fund? You will not. So, yes, we need to build a capacity. Even for the new investment guideline from MPRA, that have a lot of opportunities. Members even need to understand the nitty-gritty or the technicalities of that new guidelines. So it means that we need to build our capacity so that we can all, move on. And I'm happy that Sims, Petra, Axis, and Co are part of it because these guys were also part of formulating the new investment guidelines, which means that we are all making the strides to expand the investment vehicle so that we can all ascribe. So if there are investors here, I think this is an opportunity that you can take advantage of. Thank you very much.
Thank you very much, Mr. Esso. You can put your hands together. Thank you. Sam.
So I just wanted to just touch briefly on what Mr. Esso shared, and just to assure you that the GVCA is working towards meeting the demand that you have. Now, it is true that there aren't enough, and Amma mentioned that there are 38 private equity and venture capital firms locally. But out of them, only 8 will be exactly your requirements, because most of them are either international funds domiciled in Ghana or funds that are domiciled elsewhere. And so they wouldn't even come to you because they're coming with their own money. Now, we only have currently three active, fully operational funds. There are 5 emerging fund managers. These are the next generation of fund managers. That is still small, because for the 3 billion that you have, those 8 investment funds cannot even absorb that. And your asset under management is growing as well. So the GVCA is committed, and we've initiated a program with the Venture Capital and Trust Fund to start catalyzing the next generation of fund managers. Right? So we're going to the likes of, and I know Injaro won't like this, we're going to the likes of Injaro and saying, who in Injaro has been there for the past 5 years, and we can actually help set up a fund because they have experience doing what they're doing, and going to the asset management firms as well. How do we get a collective and create that critical mass of fund managers that can absorb the capital that you have and put it to use in the ecosystem? Right? So,
thank you very much.
I think we will be glad to be part of this conversation.
Fantastic.
And have members to be part of this conversation.
Great. We'll do two final comments. There's a gentleman here, and then we'll go to the back.
Yeah, okay. Hello. So I'm Parkisi from Stanbic Investment Management Services. I think for us, we are very excited about this. We are looking at how we could use pension funds to make an impact on the economy. If you're looking at a fund, a PE fund that maybe has a lifespan of about 10 years, I mean, the best LP you could have would be a pension fund manager who will be able to commit funds in growing other sectors of the economy. So for us, we're very excited about this because you have pension funds who are invested about 70, 80% of their assets in government securities. But then you would also want to look at how they could have a real impact on the economy. We could also lessen the burden on government. I mean, one of the funds we are invested in took a position in an investee company in Tema. Anytime I drive past it, I'm excited and like, oh, we've invested in this institution. I mean, those are some of the things that we'd want to see, and as Ghanaians, we would want to be excited about that. Yes, these are some of the impact that we are using our investment for. It's not, yes, impact investing, you have the return bit, but then it doesn't always have to be generating very high or excessive returns. But then it goes a long way. What if a fund is invested in developing, say, very good hospitals, which are providing very good services? I mean, you go on pension, you're able to access those services, maybe probably at a cheaper or affordable rate for you. It doesn't necessarily have to be seeing returns on your asset. Yes, it could come in different forms. It could come in the services that you are using, but not necessarily maybe growing very heavy returns in your pocket. So yes.
It's nice to hear this from you at Stanley. Thank you, Parkway. We would end with the last man, gentleman at the back.
Hi, my name is Dele Sonikan and I'm with INDP. So I just wanted to mention that if there's funding available, pension funds have AUM of 3 billion or more. We should also think about acceleration, right? Setting up acceleration vehicles, because you can't accelerate without funding. Now, you meet businesses, you work with them, you come up with all these strategies, and now you need to implement these strategies. And then some sort of exit where the funds come and then invest in these businesses, and the acceleration vehicle exits from the business. And then it's a revolving fund that goes on to help other businesses. So let's also think about acceleration vehicles and set up these vehicles that would invest maybe smaller amounts in these businesses to get them from one point to another. Some of them just need 250,000 cedis, 300,000 cedis before they are able to warrant 1 million, 2 million, 3 million or more. Thanks.
Thank you very much. Please put your hands together for everybody. We want to draw things to a close. I want to bring back Amma, CEO, to give us some closing remarks and also instructions on how to get the full report and hopefully how to also get some lunch. Thank you.
I just want to say a big thank you to all of you for coming. I know it's a busy time, and we just want to say a big thank you to the ecosystem for your commitment to engage. The report can be found on impactinvestinggh.org. So if you go to impactinvestinggh.org, you can download the full report. If you registered for this event, you'll be getting an email with a link to download it. This is the report summary, so it highlights the gap and highlights of the map. There will be a full report that you will get in a couple of weeks, and we'll also let you know when the live map is present. We'll be having a series of engagements throughout the year. So if you're interested in any of the initiatives that have been mentioned, training pension funds, talks about acceleration and structuring acceleration vehicles, and any other such engagements, when you download the report, you can make a comment or you can send us an email at info@impactinvestinggh.org, and we'll follow up with you. And thank you all so much for being here. We see all these partners who have been really great companions on this journey across this last year, and we're very thankful that you could be here to celebrate with us and then to work with us as we move the ecosystem to the next level. Thank you.
So the program is over. We'll see you next time. Bye-bye.